about everyone? All caffeinated and fed too much? Always happens here, Dave. You always give us too much food. Matthew 6:25 says, "Therefore I tell you, do not worry about your life, what you will eat or drink, or about your body, what you will wear. Is not life more than food, and the body more than clothes? Look at the birds of the air, they do not sow or reap or store away in barns, and yet your heavenly Father feeds them. Are you not much more valuable than they, and can any one of you, by worrying, add a single hour to their life?" Who's ever worried about money? So trusting in the Lord for our finances is a biblical principle. I think me and Dave have sort of proved that to you over the last few sessions. And worrying about them is warned against. And having faith that He will provide is talked about many, many, many times over. And sticking our head in the sand or being ignorant and hoping for the best in finances is not faith, though. Does anyone agree with that? It's not faith. In the next session, I'm going to talk a bit about stewardship tomorrow, but I think being financially literate is an absolute must. If you're a business owner and you go, "Oh, I'm not a numbers person," well, I think you need to be. You need to start being one. If you want to be financially free at any point in your life, and you want money to work for you instead of you working for money your whole life, get what I'm saying? That's what Robert talks about, is get money working for you so you don't have to work for it until you're 80 or whatever. Just slide 2 now. So we're going to talk about navigating cash flow. Who's up for that? Yeah. Who wants to see a detailed spreadsheet? Yeah. No, I'm not going to show you. Dave told me he wants to see one. So, cash flow is the life of our business. We've all heard that saying, I'm sure. Cash flow is king, and cash flow is not profit. And cash in the bank, I think we've already touched on this, is not a metric to base decisions on. If you've got 100 grand in the bank, does that mean that you can go spend 100 grand on a new car? Yeah. Maybe. Yeah, new Mercedes. Maybe, but that money could be going out the door tomorrow for all the creditors. Right. So hands up if you're in business, or you're in a business, work in a business, something like that. Are you in business to make a profit? Yeah. Are you in business to make a loss? I've asked that question at seminars a lot of times over the years, and most people don't put their hand up to the loss question, right? But I can tell you that lots of them come up to me afterwards and say, "Sarah, I'm making a loss in my business and I don't know why. Can you help me?" Because obviously there's a bit of shame attached to that. So if that's you, just come and see me after. But it's true, you didn't go into business to make a loss, did you? Like no one goes, "Oh yeah, I'm quitting my job and going into business so it costs me money." Like, it's crazy, isn't it? Alright, so what's cash flow? Cash flow is the difference between what's coming in, so the cash that's coming into your bank, and what's going out. Pretty simple. But it's not profit. So when we're talking about income, it's counted when the payment's received and the expenses are paid, not when they're raised as an invoice, okay? Now we're getting into accrual and things like that. But cash flow also includes things like if you put money in, working capital, or if you get investors' money, or if you get a loan from the bank, or debt financing. So over the years, a lot of clients say to me, the only financial numbers that they look at are two: their bank balance and their debtors, who owes them, or the invoices they've raised for the month. And many people make decisions based on those two numbers. Who knows that that's not a great tool for decision making? Again, because of what I said before. And it doesn't indicate whether your business is financially healthy. So our body can be healthy or sick, so can our business, can't it? And the reality is we could be making a loss. We could be, but we've still got money in the bank. But it's just a matter of time before we run out. Yeah, you with me? So, last year I was the treasurer for like a non-profit organisation, and in the 2023 financial year I presented to the board that they'd actually made on paper a loss. Right, and you're probably going, oh, NFP, they can't do that. Well, they can. But the CEO got very upset and started crying because she didn't understand finance. But it was just a timing issue. It was just cash flow. It was a timing thing because most of their income, or they lived on things like grants or donations and things like that. It'd come in the previous financial year, but they used those funds in the bank to fund the next year. So all it was a timing issue. Because then all the boards said, oh, we can't make a loss. And I said to them, no, you can. It's just the fact that sooner or later you're going to run out if you don't start getting some more sponsors or donations or something, you know. So why is cash flow so important? Who needs money in their business bank account every day? Why? Because we can't function, we can't operate. There's always someone to pay, something to buy. And when we see that cash coming in, we might think, oh, everything's going well, but if there's no profit in it, then we may as well just shut the doors and save money. So think about restaurants or clubs when you drive around your city on public holidays or New Year's Eve. A lot of those are shut. A lot of the hospo places are shut. Why? Why do you think they're shut? Yeah, because they've crunched numbers. They've worked out that all of their money's going to go in overtime and wages. It's even getting worse, and all the penalty rates and stuff. So they're actually going to save money by closing. Not a great scenario, but that's the world we're living in, isn't it? So anyone that's ever looked at a profit and loss or understands a little bit about this will know that bottom line and top line also don't describe the health of your business, do they? Like, what about all those companies that go, hey, we just hit $1 billion turnover. Well, did it cost you 1.1 million to make that? Then you've got $1 million loss, haven't you? Even profit doesn't, because when we think about the cash flow and then versus the accrual, there could be a whole lot of outstanding debts or creditors or bills that aren't paid or invoices. So that doesn't either. So profit and revenue are just what I call vanity metrics. And they're thrown around a lot in the startup world where people say that they get all this venture capital, you know, like for instance that company, I don't think we have it in that, you guys might have them here, WeWork, those co-working spaces, you know, he was like the $1 billion unicorn company, but that guy was out, you know, spending money on boozing and drug parties and all, you know, boats and all this stuff. Oh, we've got $1 billion. But when you actually look at their balance sheet, the debt was astronomical on there. Or he got a lot of his money from like venture people go, oh, we're going to get you on this, we're going to get you on this. Slide 3. So it's our balance sheet that tells the financial health story of your business. So everyone's got a financial story in their business, and the balance sheet, which is probably the most underutilised or underlooked report, I would suspect, what do you think, Dave, in any business, is probably the most important. Now, I'm not going to do spreadsheets and show you financial statements, or we're just going to go through a simple equation. All the financial people in the room go, oh, damn it, I wanted some equations. We're just going to think about what's healthy and what's not. So if you're a non-financial person, this is for you. Who knows what an asset is? Yell out what an asset is. Non-financial people, please, not the other ones. We're not even going there. What is it? Now, give me an example of what an asset would be on a business balance sheet. A truck? Machinery? Property? Okay, so we're all good with that. Nathaniel, you're not allowed to answer this. What's a liability on a balance sheet? Example? What sort of debt? Yep. Loans. What else? Loans is easy. Could be a car loan, could be a property. Tax debt, yes. And after I've just spoken, who knows what accrual versus cash reporting is? Yes. Are you a non-finance person? No. You're a software guy, Steve. You're right.
An accrual is a provision for an expense you expect to occur in a future period, and cash is basically it's just into the end.
Yeah. So cash is what's come in, what's gone out. Accruals is what you owe and what your customers owe you in a future time, okay? Now, who knows if you've got more liabilities than assets in your business or your personal life, so we're talking about if you work for wages as well, that you're in a bit of trouble. So if you think about the 2008 GFC, that hit the US market probably harder than here or anywhere else. We weathered that storm pretty good in Australia. Why did that happen? Because we had falling house prices and a rising number of borrowers who were unable to pay loans. So the property they're in, the asset, was worth less than the loan that they owed to the bank. And so then they get into what we call a negative equity situation. And the same thing can happen in your business or, again, as an individual home loan owner. If you work for what you could have car loans and after paying credit cards and mortgage and all that, that's far beyond what your income can serve, or the assets just aren't worth what the liabilities are. And when we can't support it, and I'm going to pick on you again, Nathaniel, because you told me you're a mortgage broker, is that lenders will quickly call in the loan or sell an asset under you. Yeah? That true? Yep. Right, do we all know what a balance sheet is now? That was the crash course in balance sheet. Yeah, everyone know? Because that's fundamentally what it is. It's a description of, you know, where our money has gone and where it's coming from. And when some of those things are out of equilibrium, it can affect our cash flow. So we need to be understanding all those things. Yes. Ross.
I'm in a service business, so my business has very little assets.
Mm-hmm.
So how does that impact on the balance sheet?
Well, you've got something. You've got...
Well, we've got office equipment, a couple of computers, and that's it. So...
You got cash in bank, you got debtors, you got office equipment.
But when you're talking about the health of your business, the assets and debts are...
But in your sort of business, it's always going to be healthy. Sorry. Professional services are generally always pretty healthy.
If you look at the balance sheet, it would be, well, there's not a lot of assets, not a lot of liabilities. So it comes back to a cash flow kind of scenario.
But if you went and took out loans, then that would impact it, wouldn't it?
It would.
Yeah.
But if I don't have any loans, and there's very little assets, very little liabilities, does that still resound as that's healthy?
Yeah.
You know, it's got a low...
But you're going to have a positive equity situation, aren't you? Yeah. So it doesn't matter how big or small or how much you've got. It's still, like Dave was saying before, it doesn't matter how big or small your business is. All of these principles still apply. And it doesn't matter whether you're a truck manufacturer or a financial planner. It still applies. So I come up with the top 4 things I think that can negatively or positively affect cash flow. So next slide. And they are outstanding debtors, work in progress and time to invoice, outstanding creditors and liabilities and debts. So this is covering all the kind of income and expense side of the financial reports. So let's just drill down into a couple of these. And we answered some of these questions in the first session about debtors, but I'm just going to hone in on it a little bit more. So debtors, customers, they owe you money. Why could this be a problem? Too long to pay. Right? You've already outlaid the expenses. You've already spent the time. Again, this is for product or service business. Outstanding customer payments is probably the biggest killer of cash flow I've seen, and and at times it's the most overlooked. Just next. Okay. That's an actual screenshot that I took from a client's MyOb system. So their MyOb accounting software, right? And it was so good that I had to screenshot it. I thought, I've got to use this in a presentation. So this is a service-based business, and they charge for time and expertise, okay? HR. They've been in business for about 6 years. What do those numbers tell us? That particular customer takes 632 days or 1.7 years to pay their invoices on average. This is real. I only took this like 3 or 4 months ago. And it's got to hurt cash flow, right? I don't know if you guys are thinking, who does that? Lots of people. The turnover of this business would be 5 to 6 million, and at any one time there was $800,000 to $1 million in debtors outstanding. Too much. That's probably 25 to 30%. Maybe it should be 10. But people get too caught up. The reason that this gets overlooked is because this person didn't have someone in their finance team sort of, well, she hired me to some point, but then got too busy. It was the too busy scenario, you know, too busy to look at the numbers, too busy to get on top of that, too busy to chase debtors. I'm chasing the work, but I'm not chasing the money. So this is real.
Rob Bossett, is this one of your plumbing invoices?
Tell you what, if you're the person who owes that, you're doing a good job.
It's got on the short-term.
Your cash flow is looking at
exactly percentage on the cash.
So it's costing us money when we're not getting paid, isn't it? For every day that person doesn't pay, it costs us money. Another one, Steve. I don't know. Is that allowed, Dave? He keeps asking lots of those.
The first question I ask when I see that number is, only 180,000 is overdue, doing 63,000 isn't. What the heck are the payment terms? That's like the first question.
Is there any payment terms? All it means is that the 63 is probably 30 days and the rest of it's 30 to 120. Yeah. It's well, you're right, it's the terms. Where are they? Where's the system? There probably is in someone's head, but they're not being enforced. Okay, number 2, next slide. Work in progress. Ross, right? Is anyone that's got an accounting firm here? Bookkeeping, right? Well, that's, yep. So work in progress. So everyone understand what that means? So if you're a service-based business, this is going to be a big problem. You've spent the time, done the work, you paid the staff. The job's not yet completed. You can't bill the client. That's what a lot of people think. Wrong. This example on the screen shows us 330... Now, this is not a client. This is something I just found on the internet. But there's 339,000 in work in progress dollars for time in 5 different clients. And whether this is, I don't know what type of business it is, it's construction or professional services, I don't know. But delayed invoicing is going to hurt cash flow as well because there's a lot of delay on that, right? That's what that's showing there. And if you're a lawyer or an accountant or even a financial planner, someone that bills in increments or 6-minute increments or a bookkeeper as well, and you don't bill and you're just racking up time, then that's like a liability to you too, and it's going to hurt cash flow. And like I said before, who is the last person to get paid in your business if this happens? You. So it's costing you money while you're not getting paid and also while you're not invoicing. Okay, next slide. So liabilities and debt, let's call them lending institutions. They all want what's owed to them, don't they? The GST you collect from your customer and the income tax that you owe on your company profits is not your money, is it? So we can't spend it like it is, but a lot of people do. Even the superannuation on your employees' wages is not your money, but it's one of the first things that SME owners stop paying Why do you think they stop paying GST, tax and super if they're struggling? But you know why they stop paying it? Because they can. Because the system, our Australian tax system, allows them to not. Like, if you say to the landlord, oh, look, I just can't pay for the next 6 months, he's going to go, well, see you, I'll get someone else, right? But the tax department don't do that. Shouldn't be telling people that, should I? Don't stop paying them. But it's true, that's how the system's set up. And a question I get quite a lot is, okay, Sarah, how do I know then what percentage or part of my sales revenue belongs to certain things like GST or taxes? Well, you've got to prepare. You've got to do a forecast. You've got to do a budget. You've got to do a cash flow that incorporates that. You use history. If you've been in business for 4 or 5 years, you've got financial history. So you use that to project what's happening in the future and see what you've paid in the past and then start to budget and put away for that. I mean, things like loan repayments, they're fixed, aren't they, usually? Like, you wouldn't have a variable type loan repayment, would you? So you know what that's going to be, but tax may be a little bit harder. But if you're not saving, and this could be a dirty word, I know, if you're not saving for taxes, then suddenly you get a giant unexpected tax bill or you fall behind on loan payments. That's going to affect cash flow. And then you won't be able to pay staff, you won't be able to pay customers, you won't be able to pay suppliers. And you're going to upset all of your key stakeholders. And again, like, ignorance is not an excuse on this. It's just not like the ATO don't care whether you didn't know. And what you need to do is go and talk to your accountant to find out what the rules are and not get into this situation. Next one. Now, I don't know whether anyone's got their financial controls in chaos, but I like to call it from chaos to calm, because normally when I go into a business that asks me for help, their financial controls are in a little bit of chaos. Who wants to have a bit of confidence in their cash flow, though? Yeah. We all do. We all want a bit of confidence in it. And I don't know everyone's personal situation here, and you might go, well, Sarah, I've got all my business finances under control, right? I know exactly where every cent goes. I know what I'm paying for. I know what my profit is. I know what my margins are. I'm never behind on taxes. I know what my loan repayments are, and I understand the tax system like a pro. Anyone? Sorry, I'm trying. I'm not being sarcastic or cynical. I'm trying to make it a bit funny, actually. But what I bet my life on is that no one's across everything, are they? We're not across every area. Every business owner I've ever worked with since 2006, whether as an accountant or a consultant, is not over everything. They're not an expert in everything. There's a problem in one area or another. Who's never had any problems or struggles in business? No one puts a hand up. So if we want to take our financial controls from chaos to calm, let's, next one. Then these are my top tips. And I'm sure you guys can think of more. It's the number one, keep on top of debtors. And I know me and Dave answered a bit of this question before, but clearly that's a hot topic because someone asked it. So we've got to have clear agreements. We've got to have clear expectations with customers. We've got to have terms and conditions that are set out at the beginning on what to expect and services that will be provided. Let's tell them how payments should be made, and let's make it easy for people to pay too. That can be another thing. People can go, oh, I lost the invoice, or I don't know what your BSB is, or, But we can have payment gateways now, can't we? On our website, it's not that hard to get Square or Stripe embedded in our web. And you can go, just go to the website, click on that. Xero and MyUp all have electronic buttons where people can just press away and pay. And sometimes that is a barrier too. If people think it's too hard to pay you, then they just won't. I've heard that before too. Have those debt collection policies in place. Take deposits, issue instalment notices. Send out monthly statements and reminder letters. That might sound really simple, but lots of people don't do it. as they just get caught up too much in the business day to day. And if you're a service business, like if you're a financial planner, accountant, bookkeeper, any of those, or HR, anything, any sort of like professional services business, and you've got clients that are recurring, so they come back every month or every year, then let's get them on some sort of fixed upfront payment. Let's get them on a 12-month and it's reviewed annually and they pay you monthly. I mean, that's got to be good. If people know that you've charged them $12,000 for the year and they've only got to pay you $1,200 a month over 10 months, then that's a lot easier for them and it's better for you and you all get paid. I mean, product businesses, who walks into a retail store and goes, yeah, I just want to get that book and I'll just pay you later? I mean, we don't, but sometimes as small businesses, we think that it's okay to just let someone take the goods and they don't have to pay us. And definitely taking deposits. I mean, I had a painter come and paint one of my properties this week and he wanted, 30% up front, that's fair enough, and then the rest on completion. And there was a big trust thing in that. I mean, I'd never engaged with him before. I didn't know who he was, so I had to trust that he was going to take that 30% and then rock up next week and actually do the painting. And then he had to trust me that on the day that he finished it, that I was going to pay the balance. So there's always going to be a trust element in business, of course. But we've got to be clear with people on what that is. Number 2 is have a budget and stick to it. We're often unrealistic about, like, when we predict cash flow. So we might have a budget, we might have something there, but sometimes we can overestimate income and underestimate expenses. Even if you've ever done a home budget, sometimes you can do that, can't you? Go, I'm estimating I'm going to have this much, and then you realise, hang on, that was a little bit too fat on the income side and a bit skinny on the expenses side. And the reason we run into cash flow problems is because we don't anticipate they might happen. So when we actually do get into the nitty-gritty of a spreadsheet, because people say to me, Sarah, why do I need to do this 12-month, 12 columns, monthly cash flow, 3-way kind of cash flow spreadsheet? I said, because it's going to tell you whether you're going to run out of money or not. That sounds a bit simple, but it's true, because the cash flow has everything in there. When you look at a profit and loss, it doesn't tell us the full story, because there's no like taxes being paid in there, there's no liabilities being paid in there, it's just pure, and that's where people can go wrong. So if we put it into a cash flow, it's going to tell us what the bank account is at the start of the year, what potentially it'll be at the end of the year, and all of the stuff in between. And can we actually afford to hire a new staff member, move premises, buy equipment? And we've got to plan for unexpected changes too. I'm going to talk a bit more about this in the next session, but having separate accounts. Who uses their business account as their personal account too? Anyone going to admit to that? No. But it happens, and that just, it complicates things. Yeah, it doesn't matter, even if you're a sole trader or a company, it doesn't really matter. You still should be saying, okay, this is my business, I'm going to take X amount every week as my wage, just like I would as a job, and I'm going to put that into my personal account and go to Coles and Woolies and pay my mortgage through that. And that's a good budgeting tool in itself. And it also will cost you more to pay your bookkeeper to fix all of that stuff up for you, because they're going to have copious of transactions that they've got to figure out what they are. So, who understands what a loan offset account is? An offset account. So if you've got a mortgage, then you can have an offset where you put, it's like a savings account, and it just reduces the amount of interest that you would have otherwise paid on that loan. And you can use that for business purposes. So Dave's got his home loan, and then he puts set amount, like saves for taxes in an offset account, and it can offset that money. Rather than having that money, just like you said before, there's no point in having $100,000 sitting in an account not doing anything. At least that's doing something, reducing interest. Because who wants to pay the bank more interest? No one really, do they? And you can save it, you can put in it for a holiday, whatever. Number 3, so forecasting and reviewing. So when, again, this is about cash flow. But forecasting for the future and thinking, all right, I can forecast out a year. We can all probably think about life or even business or finance maybe 12 months out. But when we start looking further, it does get harder. But if you're in a business that you want to grow, then you have to start looking at those things. So you could be, I'll give you an example. Let's say you're a trucking company or you fix trucks like a mechanic, like a diesel type mechanic, and you want to get another location. You know, we're talking about probably millions of dollars there if you want to expand. And unless you start to forecast out for the future, okay, what am I going to do in 25, 26, 2027? And have a plan. I'm going to talk about strategic plan tomorrow afternoon. Unless you've got a plan for that, it's all haphazard. And unless you review those as well. So we can do a budget. We can go, yep, all right, I've got my budget. I've got my cash flow. Just stick it in the drawer and we never look at it again. This is where people fall over. They don't review. They don't look at those things and maybe adjust them, because they can all be adjusted. And this is where, just like a business, who's ever done a business plan, I don't know, for finance or something, they've had to do one, and then they just stick it in the drawer and never go... Like, it's a big waste of time, really, isn't it? It's the same with the cash flow plan. If you don't review it every month and don't go, right, this is what I budgeted for, this is what I actually spent, household, same thing, how do we ever know where we're at? It's pretty hard to tell. Don't overcommit. So most of the time when I've had people, come and say, oh, Sarah, I'm making a loss in my business and I don't know why. It's mainly to do with, and not always limited to, but wages and rent. So I will look at there and I'll just go, yeah, rent's how much is too high? We can get into percentages, but rule of thumb is your rent shouldn't be more than about 10% of your income and your wages shouldn't be more than 30%. And if those two are out of league, because then you're already taken up 40%, haven't you? So don't overcommit. Don't get into, if you want your cash flow to be healthy, don't get into loans or rent, commercial leases that you can't afford. Like, I've seen even something as small as a hairdresser. She was just a little startup. She probably turned over 80 to 100,000 or something, but her rent was like 60% of the income. And she just didn't understand. And I actually sat down and negotiated with the landlord to reduce it. And he asked why. I said, because she's got into something she couldn't afford. And you guys they don't ask the question. They probably just go, I don't care. She's signed here, But it happens. So don't overcommit. And not overcommitting too, because again, there's nothing wrong with loans or debt as long as we use it for the right thing. So if we're talking about mission and purpose and things, if God's called you to do, those furniture people, I'd highly doubt they wouldn't have any debt. I don't know, but initially they would, someone like that who's got a big stock, big inventory outlay, would have a debt on a property or, but in time, they're only probably 30s, in their 30s, but in the next 10 or 20 years, they'll probably be debt-free. So what they're doing is they're using that debt. Someone asked before, should I get into debt or a partnership? The answer is yes, but it's no. But eventually you're going to pay that off. So as long as you've got a view to paying those debts off, or again, that your equity is, your assets are better than your liabilities, there's actually nothing wrong with it, as long as you manage it well and you're not overcommitted. Keeping on top of invoicing and WIP, work in progress. So if you can't keep on top of this, who's the bookkeeper here? What was your name? Nicole. So if you can't get on top of billing people and invoicing, then get a bookkeeper to do it. Because your time's probably better spent elsewhere. Because you don't want to be up till midnight every night cooking books when you should be out spending time with family and friends. How many tradies do that? That's a classic tradie. Oh, I haven't done invoicing. I mean, even I got my laptop fixed, my IT guy, and I had to take it in there over Christmas. It was good it was over Christmas because I didn't use it for a couple of weeks. It was probably a good holiday from it. And I went in there to pick it up and he goes, oh, it's $400. And I said, have you got an invoice? And he goes, yeah, I'll get to that later. I'm a bit behind. I don't think I've got one. And that was like early January. You know? I don't know. He got the money in his FPOS account, but I didn't get an invoice. But yeah, we've got it because that, again, overcommitting is going to hurt cash flow. Not keeping on top of invoicing or spending too much time and not billing as well, forgetting to bill, or I forgot to put the time into my timesheet software or CRM or whatever, you know, that's going to hurt cash flow too. Yep. So I've finished and I'm going to do Q&A now because Dave told me off for not doing that last time. So is that all right?
Good.
Hopefully that wasn't overwhelming for everyone. I know it was a lot more heavy than the last one, but I wanted to ease you into it.